I keep encountering the same question. How can I buy a new home if I already own a home? Well, there are a few simple and straightforward options that can help you achieve just that and attain your real estate goals when you already own your current home. Hi, I'm Shemeika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. We have products for you all. Let's talk about a few options on how you can purchase a home when you already own a home. One option is to keep your current home and rent it out. This would particularly work well if you are one of those people who bought or refinanced during COVID, if you have a 3% or less rate. If you have the financial capacity to hold two properties, if you have a mortgage on it, this approach can provide passive income and potential long-term appreciation for your rental property. It is important to consult your financial advisor so that you can assess if you can handle two mortgages and maintenance costs prior to choosing this option. To rent your current home while you purchase a new home, it is crucial to do a little bit of market research so that you can ensure that there is in fact a demand for your rental in the area in which you live. It's also important that you get a ballpark figure on what your home could rent for so that you can analyze your debt to income ratio when applying for your new home. Your debt to income ratio will determine how much you can afford when you purchase a new home. Also, many lenders will require a lease agreement to actually be in place prior to funding the new loan. So be prepared to place a tenant while also shopping and closing on your new home. You may decide that it is too much work to place a tenant and to manage the rental. If this is true for you, you can always hire a property manager or property management company. Many property managers will even offer the option to either simply place the tenant, or they can place the tenant and also manage the entire property for you from afar or while you're afar. Another thing to consider when weighing the options of keeping your current home and leasing it are the tax implications. Make sure that you understand the tax benefits and liabilities of becoming a landlord, as well as the requirement to continue to pay your property taxes on the old property, as well as the property taxes on the new property. Now, don't forget to like and subscribe for more real estate insights. Another option that is worth exploring in order to be able to buy a new home while you own your current home is to write a contingent offer subject to the sale of your current home or property. What does this mean? Writing a contingent offer on the sale of your current home means that your purchase of the new home depends on selling your current one. This can protect you from carrying two mortgages simultaneously. When you include a home sale contingency clause, your purchase agreement will specify that the deal depends on your current home's successful sale. Should you opt for this option, be sure to pay specific attention to your timeline. Contingent offers are not looked at as favorably by home sellers, so you will need to create an aggressive yet manageable timeline so that you are able to get your offer accepted and actually be able to close both transactions simultaneously. Make sure that you work closely with your realtor to coordinate closing dates and to ensure a smooth transition. If you're selling your current home in a different area than that of the one you are buying, make sure you connect both your listing agent and your buyer's agent. It is prudent that these two agents are on the same page so as to properly execute the timelines and protect you and your assets. One thing to note with contingent offers is it is customary for a seller to be able to continue to market the property and accept a backup offer. If a seller does in fact receive a backup offer, depending on what the contingency contract states, they may be able to give you a 48-hour notice to perform document, meaning that you could be forced to remove the sale of your home contingency, or the sellers can cancel and accept that backup offer. Contingent offers can be a good option, but only if the seller of the replacement property is willing to work with them. Stay updated with more tips and don't forget to like and subscribe. Another option that you can consider if you own a home and you want to purchase a new one is to sell your current home contingent on finding a replacement property. This strategy involves making the sale of your current home dependent on finding a new home. It can provide peace of mind that you won't be left without a place to live. Market coordination is important, and just like the reverse contingency purchase noted above, it is important to coordinate your timelines with the sale and purchase. Be sure to stay in constant communication with your realtor, and if they are from two different areas, make sure both realtors are in communication with regards to the different contracts and the timelines. Your realtor can help synchronize the sale of your current home with the purchase of a new home. Things to consider when selling your home subject to finding a replacement property. It is important to have some flexibility in negotiations. Buyers might agree to your terms if they're not in a rush or if the market is slower, but if the buyer who's purchasing your home needs to be moved in by a certain date to start a job or to get their kids in school, etc., it may be more challenging to negotiate this contingency. It is very important to have detailed contracts, so make sure to clearly outline the terms in the sales agreement to avoid any legal issues or misunderstandings. Again, it is very important for you, the realtors, the lender, and the escrow officers to work diligently and very closely to ensure this is a smooth transaction for all. For more expert advice, don't forget to like and subscribe. And the last option I want to discuss is the option of a bridge loan. A bridge loan is a short-term loan used to bridge the gap between buying a new home and selling your current one. Using a bridge loan will allow you to use the equity in your current home for a down payment on the new one prior to selling your current home. Make sure you have a proper financial evaluation to ensure you qualify for this loan type and understand the terms, as they can be costly and have higher interest rates. Be sure you have a repayment plan as well. Have a solid plan to repay the loan. This is typically done by selling your current home and paying off that bridge loan. It is true that bridge loans can be costly, but something to consider is the ease they create in the transition, only having to move once, not putting your belongings into storage, and not being forced to rent either a short-term or long-term home also have cost and stress implications. Make sure you understand the cost of a bridge loan and have enough details to weigh out your options to see if this is the right one for you. And don't forget to like and subscribe for even more financial tips. As with any financial decision, each of these options has its own benefits and risks. Consulting with real estate professionals and financial advisors can help determine the best strategy based on your financial situation and the current market conditions. Ensuring proper planning and understanding all contractual details can lead to a successful transition from your current home to a new one. Thanks for tuning in. If you have any questions on strategizing your next move, please reach out. I'm Shemeika Fox, your Santa Cruz real estate expert, and as always, I'm here to help. Don't forget to like and subscribe for more expert real estate tips.